course, the big economy story of the past 6 months, year or so has been this, for lack of a better word, meltdown in the subprime lending market. It's spilled over pretty much into any financial sector you want to look at. It's the stock market. It's affected credit card rates. So, twofold question here. What should Congress be doing to reform lending practices so that people on the lower end of the economic scale can still afford homes but aren't in these mortgages that have caused these kinds of problems? And right now we're a country with a negative savings rate. We're spending more than we make as individuals. And is there something that Congress can do to address the consumer end of that question, which would encourage us to save more, live within our means, etc.?
Okay.
Well, our economic status in this country, they call a recession right now. We're heading toward a recession. I think we're already in a recession, that we're heading towards a depression. The federal government does have a responsibility. They have a responsibility to make sure that people understand they have a personal responsibility when they go to take out a loan. They also have a responsibility to make sure that the banks aren't offering predatory loans. Recently, Congressman Miller finally passed a predatory lending bill that he's been putting out there for many, many years. Finally got it passed to Congress, and it's going to help a little bit, but it's not going to do the job we need to have done. We need to put more pressure on our banking institutions to make sure they're not offering loans people can't repay. We need to make it a more stringent process to get credit, to make sure people can afford to pay back those loans. We can't facilitate people to take money from a bank without paying it back. The biggest economic hoax in the last, I'd say, 12 years in our federal government was the Consumer Protection Act of 2006, which is the bankruptcy bill, which doesn't protect consumers at all. It was basically drafted by MBNA, and was for the banks. It's pro-banking institution. I believe we have a responsibility to make sure everybody understands what their role in borrowing money is. We also need to put a stop to corporate welfare. CEOs get severance packages. The CEO from ExxonMobil just left and got a $300 million kiss on their cheek. And they also, at the same time, cut their pension fund that same year to pay for a $300 million severance package. We need to make sure pension funds are funded completely and that money stays where it should be.
Johnny.
I'll share something with you a little bit different. We've got to understand what money is, how it's created, and where it comes from. And regardless of all the dialogue that can take place, it will still go back to one thing. And that money is supposed to be under the Constitution created by the government. I should say the word coin because during the Revolutionary, not worth a continental was a phrase they were using because it was printed money. Printed money is easy to duplicate, which the British Crown did. So when we got away from the Constitution and turned it over to the Federal Reserve is not any part of the federal government any more than Enron was, or Halliburton, or Blackwater. They're a total separate entity. And so there is a problem there. The government doesn't create or distribute its own money. We're $9 trillion in debt. There's not $9 trillion in money printed. We've got away from our Constitution, and as long as we're away from our Constitution, we'll constantly have these problems. Our actual financial future and livelihood is in the hands of international bankers. They can make us or break us or control us anytime they want to. That is our real problem.
I think there are short-term measures that we can take to try to help the mortgage situation. We can increase the number of new mortgages that are available for the Federal Housing Authority. We can encourage the holders of these mortgages to renegotiate. Now, whether they're going to be amenable to this, Bonnie Franks would like to suggest that they be given a short-term gain from this, that they renegotiate their long-term gain, that they would get a short-term gain in return. We need to increase liquidity in the mortgage market. We need to add money to help people not lose their homes. And this could be voted. And I believe that the legislature is now considering all of these moves. We also have to look at what we're going to do long-term. And one of the entities that got us into this problem was the mortgage broker. The mortgage broker is something new in the system. It's not a regulated entity. And these people were paid per mortgage that they sold, which they then handed to the bank, which accepted what they had written on the piece of paper. And they were paid their $1,500 and they went home with no liability or risk involved. We need to regulate this. And I agree with Marty Franks, who suggested that we need a system of regulation similar to the United Kingdom's Financial Services Authority. We need a single regulating system that regulates all financial services. Right now we have 30 or 40 different entities. We have regulators, regulating regulators. So we need to make this make sense for everybody. We also need to change the amount of money that the FHA is willing to loan, willing to fund a house. Right now, the level is below, in many markets, what they're willing to give as a loan is below what the houses are costing. So whoever you are, you're having to go outside the FHA system. Then you go into a market that isn't as well regulated and isn't as well controlled, and then people get into trouble. If you put the regulation into place, you won't have subprime lending. You can require them to have a minimum down payment, 3%, used to be 20% for a certain amount, certainly I remember 10%, but we need to have a minimum down payment. We need to make sure that these people can fund this loan. And finally, one last thing, we need to change the securitization of these mortgages where they're packaged by the bank, they're sold to other entities, to investment bankers, all over the world. There are cities in Norway, there's a city in Norway that's going under because they carry subprime mortgages.